Hello and good evening, even though it's very clearly afternoon as I'm shooting this. Yes, I stole that joke from John Krasinski's video on Facebook. You should totally check it out if you haven't already. Today I wanted to talk about something other than mortgage rates because it feels like that's all we've talked about in the mortgage sphere for the last month or so. You may be aware that Fannie Mae and Freddie Mac has given homeowners the option to defer their payments or go into forbearance during what is a really uncertain time for millions of Americans. And it's a great premise, great idea to help consumers who may be struggling to make those payments and maybe, push them down the road a little bit, hit the pause button on people's terms, and maybe just tack on those payments to the end of the term. The biggest advice that I can give, that we as loan officers can give any of our past clients who own their home, is call your servicer. If you are struggling with the notion of being able to make that April 1st payment or your May 1st payment, call your servicer. Find out what your options are, because I was reading a story on CNBC.com the other day where Bank of America's CEO went on television and said, hey, if we have your mortgage and you're not thinking you're going to be able to make your payment in April, May, or June, give us a call and we'll help you out. And apparently 150,000 calls went to Bank of America requesting just that. And then consumers were going on social media and saying, oh, it's a scam. They're basically saying, well, you can skip your April 1, your May 1st, your June 1st payment, but then you're going to owe us all 4 payments on July 1st, which doesn't make any sense at all for someone that's in a position where they have to defer their payments. The odds of them being able to come up with 4 payments at once in the near future are pretty slim. So, and I'm not picking on Bank of America here. Lenders and servicers are going through a host of issues that I'm not going to really get into on this video, but it's not so simplistic to say, oh, we can just have borrowers skip their payments, tack it on at the end, and there's just no problem. There's lots of problems that go into that. So the biggest advice I can give is call your servicer, see what your options are. And then beyond that, the truth is, if I were telling my own family member or my own past clients what they should do, if by any means necessary, you're able to make your April 1st payment, your May 1st payment, your June 1st payment, you should do so. It's just so much cleaner than messing with your term or risking credit issues because you would be considered late on your payments. I mean, again, I'm not here to minimize the issues that so many people are dealing with right now. Millions of unemployment claims were filed last week. If you're someone that has an $1,800 payment, and there's times where you don't have $1,800 in your bank account to make that payment, absolutely call your servicer. But if you do have reserve funds available and you're able to make your mortgage payment going forward, by all means, you should do so. It's just going to be a lot easier. And that leads me to the last thing I wanted to really speak directly to my agent partners and to prospective home buyers going forward. We as loan officers are ever evolving in how we structure our loans and how we advise our clients. And one of the things that's always amazed me, it's always amazed my branch mates. One of my best friends in the world, my branch manager, Jordan Chomko, has always been big on the notion of reserves. Reserves meaning when you close on your home and you buy your new home and you walk away, you still have money in the bank saved away for a rainy day. It's very important. And the truth is, in this day and age, you could close on most conventional and government loan options on a primary residence and not need $1 of reserves. It means that we can go to the closing table and the buyer walks away with the keys in their hand and $10 in their bank account, and we can still do the loan. And it just scares us because, someone could buy a home and then the next day, a light bulb goes out and they can't afford to go to Home Depot and buy a 4-pack of light bulbs. It's crazy. Think about all the things that could go wrong with homes. Water heaters break, electrical issues, plumbing issues, roof. So many things could go wrong. And that's just on the house scale. Right now, we're experiencing the worst of the worst in terms of millions of people being unemployed, losing their jobs, being furloughed, real life issues that cause people to potentially not be able to make their mortgage payments. So I speak directly to my agent partners and my future buyers to say, while I will always do the deal if you want to do it, my advice as a mortgage advisor, not as a loan guy or a loan shark that's just here to do as many loans as possible, but as a mortgage advisor who wants what's in my client's best interests, is to shoot for no less than 3 months reserves when you buy your home, because you never know what's going to happen. The HVAC could go out. You could be in between jobs, or you could have a slow month of commissions, something like that. It's always good to have 3 months in the bank for a rainy day, or in this case, a coronavirus pandemic. So again, I'll do deals. I'll always do whatever's in people's best interest. And by the way, every situation is different. I've had clients that were in a bad rental situation. They had kids. They needed to get up out of there. And so it made more sense to buy this very second and not be as concerned with the reserves. But then other times, if it's a situation where you're living at home with family, or you're in a fine lease where you're able to, to stay there for a little bit while longer, it's not the worst thing in the world to somehow come up with 3 months reserves. And that could be money in the bank. It could be something from family, if you have family members who could help you out in a tough time. Even a retirement account you could draw against, a 401k, something where we don't have you showing up to closing and you walk away with the keys in your hand and $10 in your bank account. That's the way I'm evolving as a mortgage advisor, to have your best interests at heart. So that's what I wanted to say. Thanks for listening. Call me, email me, text me if you have any questions. And just know that March 2020 is going to be one of the weirdest, wildest, most vivid months in many of our lives. And thank goodness tomorrow is April 2020. Take care.